Hi, once again I'm back, Kaushik Chatterjee. In this video, we are going to discuss about MCLR. Yes, that also most of the bankers even they will be knowing about this terminology. But yes, as a common man, definitely I have no idea what is MCLR and what exactly it is going to be used, where it is going to be used, what exactly will be the effect on my life, what exactly will be the effect on the society. Right. So first and foremost thing, let me tell you what is the full form of MCLR. It is marginal cost lending rate. I repeat once again. It is called MCLR. M stands for margin, stands for cost, C stands for cost, L stands for lending, R stands for rate. Marginal cost lending rate. Now in the last video only we have seen what exactly BLR. So when I as a bank, now individual bank, let's say whenever they borrow money from RBI, so whatever money even they get, so for what purpose they are going to take this money, what purpose they are going to get this money, what is the end use of this money? To run my show, to run my operation, run my business, right? So I'm a bank, XYZ bank, maybe a commercial bank, maybe a PSU bank, maybe even a nationalized any private banks, whatever it is. So I'm going to borrow the money from RBI, irrespective of all other parameters, what exactly I have already discussed in this series. Now coming to MCLR, how it is going to be effect on the public, how it is going to be effect on my loan. So when I, let's say, take it from RBI X amount or X rate of interest, so definitely to run my show or my operational cost, my admission cost, my office cost, my even sales cost, my marketing cost, so definitely that will be all loading. Am I right? So before I get into this discussion, let me give you a small example. Let me give you a small even understanding for all of you so that you will be able to understand what exactly MCLR and how it is going to be affect, how it is going to work out also. So today, let's say you are going to purchase, let's say any small item from your, let's say local even shop. Let's say down only you have a shop, you have a local shop and there you are going to purchase. So what happens? Normally this guy will give you a cost, let's say on the MRP. Are you getting my point? Maximum retail price. MRP is means maximum retail price. So that is not my discussion, but still I'm just telling you. So now let's say this is 10 rupees. In Indian currency, I'm just telling 10 rupees. But let me tell you, the person who is selling you 10 rupees, the person is not buying in the 10 rupees. So what is the point? If I'm buying 10 rupees and I'm selling also 10 rupees, there is no point itself, right? I'm not doing any NGO service, I'm not doing any social service over here. So imagine, let's say he has purchased from the factory or let's say from a bigger shop or let's say maybe any consumer forum itself where he has purchased it, let's say on the 8 rupees, he is selling it on the 10 rupees. Now this 2 rupees is my margin. For what? Because I have taken from, let's say, bigger shop from far away. Let's say that's consumer cost, like loading, unloading, all this cost it is involved, and my shop cost, my maintenance cost, everything it is involved. And that cost I'm keeping it, let's say, with this 2 rupees. So irrespective of all these things, let's say my profit margin it will be, let's say, 1 rupee, because another 1 rupee I have to spend for all this cost whatever I told you. So my margin of this selling this I mean material, or my margin of the profit of this material is only 1 rupee, though I'm taking from you 2 rupees, but exactly my margin of profit to be 1 rupee. So this is just an example. This is just to understand what exactly MCLR. So MCLR works on the same manner. When as a bank, even I'm lending money from the RBI. So now I'm giving money to whom? I'm again lending this money to whom? The end user. Again for the different purpose, maybe for my own personal, if I'm going to take, if I'm going to take for my car, if I'm going to take for my home, if I'm going to take for my education. So different purpose, different even loan I can apply to the bank. So bank has, let's say, taken on X amount. I'm going to pay bank even Y percentage of amount to the bank. To the RBI. So that amount I cannot give it the same rate of interest. I cannot give it to my even end users. So for that, what I need to do actually, I also need to keep that margin. and that is known as your marginal cost lending rate. To run my office, to run my show, to run my marketing cost, to run my sales cost, all these things when all put together, that will be my margin. And that definitely I'm going to take it more than from my BLR, the base lending rate, what exactly I have taken from the RBI. I'll add even some XYZ amount on this on the end user so that my margin cost will be there, irrespective of my admin's cost, irrespective of my sales cost, irrespective of my marketing cost. And that is the whole meaning of MCLR. And that is only going to affect on your loan. So when BLR is high, MCLR also it will be high. So it works in a same manner, and definitely that's what you will be getting when repo rate even changing. So automatically your uh, rate of interest also it will be changing. So like this, it is similar way it is going to work. So after knowing this video, after discussing in this video, so I hope most of the people have a clarity now when my rate of interest is going high, when my rate of interest is going low, how it is going to be affect on my loan, how it is going to affect on my society. Each and everything it is now been clear in this video. Any further discussion, any further question, I am always there to help you out. Thanks for watching.